everyone, welcome to the Stock Market Morning Prep video for Friday, March 14th. Right across the board, tensions coming out of the Ukraine and Russia. Add on top of that some worse than expected econ data coming out of China the previous night. That overtook the positive retail sales. That actually we actually opened up green in the morning, and then we just kind of faded away, and then we really got into a pretty decent sell-off yesterday. Dow Jones down 231 points, Nasdaq down 62, S&P down 21, and the Russell down 14. And like I said, risk happens very, very fast, so we really need to be on our toes. Now, we did have a pretty decent sell-off for the first day. Now, it is only one day. Remember, one day doesn't make a trend, so we want to know where we're going from here. Today is a weekly options expiration. It's on Friday today, so things could get skewed with the market makers playing games with a lot of these stocks. So even if the market does, trade sideways, maybe slightly down or up, really is nothing until next week. We want to really see what happens next week, and then we have the monthlies that expire next week. So again, additional game playing with the market makers. So you need to really kind of navigate through these cycles here. But we do have a lot of red flags. I've been stating that for a while, and again, when in doubt, cash is a position. Take 1 or 2 day trades if that's what your plan is, and if not, if you're a longer term investor or a swing trader, you got to use use extreme caution here, because what I'm going to show you, what I've been showing you, may come to fruition here. So let's be on our toes here, because things could happen quite quickly, and we are at extensions, and that's the other problem. Not saying the markets can't go higher, but when you have a lot of these flags, red flags, starting to really hit, it's something that you really can't just ignore. All right, want to show you the McClellan oscillator. Right off the sell-off, we have plenty of room to run to the downside before we even get extended, guys. So remember, lots of room to run here on both sides. So I just wanted to show that out to you. Stocks above the 50-day moving average, like I mentioned yesterday morning and a couple days this morning, in the area where we should see a little bit of a pullback, and that's exactly what we got yesterday. Okay, and we have plenty of room before we can get into an extreme area here. So again, the McClellan oscillator, stocks above the 50-day moving average, are confirming plenty of room to run to the downside. Take a look at the VIX. Now it's sloppy, right? But concentrate really on this here. Let me just kind of open this up a little bit. This is what I really want you to concentrate, just on this section here. We are in the Bollinger Bands. We're starting to break out of the Bollinger Bands. Now, that doesn't mean it's a sell signal. It means we can continue to go up to $18, $19, even $20 before we even start to break down again. Remember that. Now, look at the indicators. They're starting to curl up here. MACD, stochastics. That's a good sign for the VIX, a bad sign for equity. So we want to monitor what the VIX is doing. And I do encourage you to monitor the VIX, the tick, and if you are looking at the vol spread, which is a VOLSPD, if you have that, or up-down volume, something interesting that you really need to follow intraday if you're trading intraday. But again, VIX here, as you can see, momentum starting to kick to the upside, and that is not good for equities. Okay. Now, another chart I like to look at, the New York new lows. When you get these big spikes, that's when you start looking at, as you can see here, the market sells off, and then when we keep it under 100, 120. Market just kind of grinds higher. Right now, we're not there yet, but this is something interesting. When we do get a big spike like that, we could have a market selling off here, and then really start to get some momentum to the downside. And I'll show you some levels as well. I want to show you the DAX. As you know, this is Europe's main index, and we have a head and shoulders pattern here. I mentioned that to you. I showed you yesterday. We had this lower high from this previous high. And then you can really shape it up into a head and shoulders pattern. We broke that neckline. So again, another major index starting to break down here. Okay, another warning sign. All right, now let's take a look at the U.S. dollar. Haven't showed that to you in a while. This is interesting. Okay, now the dollar was looking at. I mean, if we broke 79, it is a major support. The dollar will break higher. Commodities would go up as well as equities. Now, it did not do so. It actually closed up on the day. And it it actually recovered. It was actually down and then recovered. So this is interesting to see. There's a lot of overhead resistance, yes. The indicators are actually pointing lower. Yes, we do understand that. But watch if they start to break and they start to reverse back up again, and this thing gets some headwind. This thing could really start to move. And if that does happen, that's just going to give you more evidence that, we may be going into some kind of a correction. Now remember, just several weeks back, we had a 5% correction, give or take, and then we rallied for 24 days. So we don't know until the correction actually gets started. We want to look at what volume does, and we want to understand that we want to see what the leaders are doing in the stock market, what the indices are doing, and of course what our correlated and inversely correlated assets are doing to equities. Okay, that is important, and that's all going to sum it up to say, okay, we are officially in a correction, and then we look for some downside targets. But right now, one day doesn't make a trend. Okay, now I just want to show you the ES. Here's a 5-minute chart of the ES. Oh, by the way, if you are trading contracts, it's contract rollover Thursday. So now you'll be going from the H's to the M's, just to let you guys know in case you do, in case you are trading futures. M's, the M contracts are now good for today. All right, so now here's what we have. As you can see here, we rallied up on the good news, on good retail sales, and then boom, we just really just took it on the chin here, guys. And then the problem with this is that other than this little bear flag here, you really had no other pullback. I mean, you really did, unless you wanted to, be brave and then short here in the hole after this big move, which I wouldn't do personally. My risk reward, it just doesn't call in my plan. And then we just rallied again. We sold off again, excuse me. So one little pullback we had, and then the market just sell off. And that's really been the case lately. If you missed the one move, and the reason why is those algorithms, when they just probe, they just keep probing one side, and it just keeps pushing the markets to that side, to that trend for the day. So not really too pretty here. But again, just wanted to show you, up here, and then all of a sudden, boom, we broke that main pivot, and that was it for the day. Take a look at the bonds, and I want to show you. I'll show that to you on the other overlay chart that we have. Bonds are interesting, and I mentioned to you the bonds are the smartest guys in the room. When the bonds are not breaking down, yeah, there's a reason, and that's a red flag for me anyway. And I'd like to mention to everybody when it's watching the videos, that's a big red flag that we are not breaking down, and we're actually now at the 200-day moving average. If we break that, your really next target is a 38% retracement coming out at 136. So if that happens, you're going to see a quick liquidation in equities. Okay, now let's take a look at the yen. Same thing with the yen here. Take a look at this. Now we do have a Fibonacci resistance cluster right up in this area. Remember, it held this time, the last time, and this last time. We did break down, but we caught this slanted uptrend line, and now we're back into this cluster. If it takes out this cluster, guys, we're going to see the 200-day moving average as well as the bonds, and that's going to add another additional pressure on equities. Okay, so again, watch this area here, and if you're not looking at the yen future, you can look at the dollar yen, which is correlated with equities. So what if equities moves higher, yen moves higher? Just to give you an example. All right, now here's the ES. Caught that 50-day moving average now, and again with the rollover contract, you get a little funky movement. But right now we are up about, well, we were up 3 handles, and now we're only up 50 cents in the pre-market session. So not getting any legs. So even if we trade sideways, maybe slightly up or down, I wouldn't expect too much movement unless, again, we get some additional movement, news coming out of the Ukraine. So that's something that we're going to really need to get. Remember, this market right now seems to be driven on just basic news, and again, what's coming out of China. So again, broke out distribution day. We caught this area here, and if this doesn't hold, you're gonna be looking at a much lower levels, somewhere into the 1830ish area. So take a look at some of the areas here that we have. Here's the hourly chart, and I have a bunch of areas way down in here, as you can see. And these are areas that have been true for quite some time. And as you can see here, that 1838 pretty much held. We had that 1847 that held, and then again with the contract rollover, you're going to get a little bit of this funky opening here. But right now we're down. We're up about 50 cents. So 1838, we lose this area today. We should see that 1820, and then we would reevaluate it. And again, it doesn't have to happen today, but just let's be cautious here. Here's the emerging markets. Remember, I mentioned this to you again. Watch what emerging markets are, because if they start to slide, okay, if they start to slide, so will equities and our worldwide partners. And this is not a good sign, as you can see here. Again, China came out with some big misses in their economic data 2 nights ago, and sure enough, here's what we had yesterday in this big sell-off. So this, keep an eye on this, because what triggered the sell-off here is probably going to trigger the sell-off again. And if this starts to really break down, and I would be really cautious here. Remember copper. Copper is starting to really lag here, and copper really took it on the chin the last few days. All right, now this is the overlay chart. Now, obviously, not much has happened. We were looking here, what's going on? Why is gold up and bonds really not going anywhere in this channel at the upper end of the range? Well, sure enough, here you go. Equities lower. Gold actually popped up now, and then look at the big day it had. Bonds, money coming out of equities and rolling into gold and rolling into bonds. And that's why I did this overlay for the last, I don't know, maybe several weeks. But this is not a good sign, right? If you have a healthy market, equities should move higher, and bonds and gold should be moving lower. Not the case right now. And there's a reason why the gold hasn't sold off, and bonds for that matter. You know, you get a couple of days here, sell off, and then it just kind of runs right back up again. So again, something really to take note of. Here's that failed bull flag that we talked about. Now is at the 20-day moving average. On the spiders, bottom line is if we lose this today or tomorrow, we take out the lows, you're going to see the 50-day moving average rather quickly. And then again, we would reevaluate it. But as you can see, we're rolling over. Believe it or not, this is quite healthy for the markets. The longer-term picture still remain intact. We are still looking at an uptrend. Nothing seriously has been technically damaged to the longer-term picture. Even if you roll back to here, as long as we don't take out the February lows, if we even come into this lower upper trend line here and still make that higher low from here, we're fine. And actually, it would be a great reset in the markets where you could start buying some good quality stocks again. Right now, again, we're starting to roll over, but the thing is this, do buyers of dips step in again? And that's the big question here, okay? And that's what we want to make sure. You don't want to be shorting in the hole as well. But, any rallies, if we start breaking down again, and let's put it this way, if we rally today, and we have a very weak rally, and then Monday we start to get some selling pressure again, that would probably be the cue to start selling rallies in the market. Right now, it's not. Yesterday was just a quick day trade. But here's the other cue here is the transports. And remember, I said if we take out this high, we're going to see at least 140. Remember that. We did not do so. We actually ran into a bull flag, and then we broke that bull flag. And this has plenty of room to run to the 20-day. Remember, this is our leader. Look at the distribution day it had. Watch the transports. Watch this ETF, the IYT ETF intraday. That'll give you some clues of what's going on really basically under the hood of the S&P 500. The transports leader starts to sell off, you're going to get some. Definitely get noticed, and U.S. equities S&P will follow. Trust me. And here is the IWM. Same thing. Our secondary leader breaking down pretty hard. Caught the 20-day moving average. If we lose yesterday's low, you will see the 50 quite quickly. Okay, and that's something that I'm going to be watching. And I do watch consistently. All right, here's the Q, same thing, broke down again, and then I'm going to just show you some of the sector charts. Like I said, there's been an influx of retail buying on margin. That is a very bad sign. Once a lot of this, once the markets start taking some key pivotal lows out, everything gets liquidated because they have to pay for their bad trades. Remember that, okay? So that is a very bad sign. And if we start to really making series of lower lows and lower highs, look out below, because I think we would get a quick flush to the downside. Right now, obviously it's been contained, not has happened, but just keep that in mind. Risk happens real quick. All right, diamonds, as you can see here, the Dow Jones ETF, clinging to that uptrend line. If we start to break that, now we have lost the 20, we've lost the 50, barely, but if we need to get back above here, if we can retrace back 50% of this engulfing red candle, then maybe this thing could be salvaged. But remember, big bearish rising wedge broke down, and now we're indicating starting to roll over. Again, though, it is healthy for the markets to kind of reset. Okay, OIH, still like the oil services, as you can see here, now coming back to the 200-day moving average. And if you look at Schlumberger, actually roll back in here. This is ideal. But do we buy here now? Well, if the markets were healthy, sure. If it was an isolated sector incident that maybe we just had some weakness because of a downgrade, yeah, I would buy. Do we buy now? No, absolutely not. We let the markets tell us which way we're going, and it could actually move lower. And if it does move lower, based on sympathy, right? If oil is not getting really destroyed on the sell side, and it's just following on market sympathy, yes, then I would be looking to buy certain sectors, absolutely. And XOP, the oil and gas, as you can see. And look at Valero. Valero here actually held up, back tested this. Now, again, it needs some work to come back in again. I'm not looking to buy breakouts in a weak market, but that's something that's interesting. Here's the XLE. Same thing here. Nice basin pattern above. It did break back down again off this bearish rising wedge, but I'm a better buyer than a seller in XLE. Here is the TAN. Now, remember, risk off, you're going to get some of these higher riskier plays, right? All these alternative energies are going to definitely move much quicker and faster to the downside in the direction of that risk off, right? Which would be down. And now we're at the 20-day moving average. So again, I like solar. I love the solar sector, but you have to be nimble with the solar sector. You can't just let it sit there and say, okay, I'm going to wait for the next buy-in, because it could be lower here. Here's YGE, big breakout, and then again gave it all back the last 4 days. I do like YGE here, but again, with the smaller cap stocks, they're a little more riskier. Better than the first solars. As you can see, they hold up a little bit better. Again, I like the solars. They need to reset, so they need to create some bases and build a better base and then break out of that base, as well as a lot of the other stocks that we're looking at. Here's Trina Solar, same thing again. It's at the 50, but again, it could easily break below the 200-day moving average. But just watch them for entries. Home construction, again, breaking down. As you can see, the theme is sell everything, right? Sell everything, ask questions later. Here's XHB. Pulte Homes, again, now at the 200-day moving average. And remember, like I said, when we're looking at it up here, say, oh, I love it up here. But remember, with the markets at extensions, eventually it will take everything else down with it. That's why you don't have to be so aggressive. You don't have to keep trading and keep buying these stocks while the markets are at these major extensions. You know, if you know that the markets are extensions, eventually, if the market rolls over, so does the stocks. 80-90% of all stocks are going to follow what S&P is doing, right? Because it is in the S&P 500. So that's where it says, well, you know what, everything's extended. Let me just maybe a quick short-term day trade or an overnight swing trade, and then reevaluate. And if you do get caught in this, you're not getting hurt. You know, I know a lot of people just keep buying and buying and buying, and the next thing you know, you get a day like yesterday, wipes out all their gains. You don't want to do that. Lennar, same thing, at the 50-day. Now, a lot of these stocks that I really like are coming into some good buy zone areas. Now, but remember, we need to see what the minis and what the S&P 500 is going to do, as well as the other indices. Okay, and I want to just show you quickly on the banks. Again, risk off, banks take the first hit. Goldman Sachs broke the 50. Next area is going to be back to the 200. Right? You can see this. Boom, boom, doji, and then we failed. Okay, and again, something like that. Same thing here with the Bollinger Bands. We're outside of the Bollinger Bands in JP Morgan. We closed back in it. Sell signal. We failed. Okay? So remember, guys, this is something that you don't want to get so aggressive on, especially when you have a lot of these banks that follow what the market does. And here's Citibank. Literally just got destroyed. Ran back up to the 50, and I kept mentioning 50 is the area. Needs to base a little bit and then break out. Sure enough, failed, and now we're back down here at the lows. So, you know, keep it tight. Keep it tight. And Apple, same thing. Apple here, really not doing anything wrong. I mean, Apple, I like to see Apple take out 538, 540. To get me interested in a long side, I want to see Apple take out 540. It looked like it was doing so the last couple of days and then actually just failed. So Apple, really nothing bad here. But again, look at the MACD stochastics, looking quite constructive to the upside, but it could easily falter and break down here with some bad news coming out of Russia and Ukraine. So remember, we have a lot of news-driven market at the moment with China and the Russia situation. So be on your toes, lighten up any of the loads, and remember, when you have risk that is really quickly, and I keep mentioning, you know, as now put premiums are going to be expensive. The time to be hedged is when market is going in your favor, where the put premiums are extremely low. So now it's a little difficult to start hedging unless you start buying some inverted, you know, ETFs like the SDS, So you buy stock to hedge your portfolio. All right, guys, have a great day. Enjoy the weekend, and we'll have a big report on Monday. Remember, guys, take it really light here. Markets are at a conflection point here that could go either way. We don't know yet. One day doesn't make a trend, but to me, it looks like we might have some continued downside pressure. Aside from today, I think today will be a lot of noise, but let's see really what happens Monday, Tuesday, and that'll give us the cue that we may be shorting rally soon. Have a great day. Enjoy the weekend.